In this video, we will see how to complete a worksheet. A worksheet is a multiple column form used in the adjustment process and in preparing financial statements. It is a working tool and not a permanent accounting record. Companies usually computerize worksheets by using an electronic spreadsheet program such as Excel. A worksheet is neither a journal nor a part of the general ledger. The use of a worksheet is optional. A worksheet makes it possible to provide the financial statements to the management and the other interested parties at an earlier date. Let's look at an illustration to understand how we can complete a worksheet. A partial worksheet of Amplitude Company is provided to us. It has the adjusted trial balance from which we are required to fill in the income statement and the balance sheet to complete the worksheet. An income statement shows the financial performance of a business for a specific time period. It presents the revenues and expenses and the resulting net income or net loss for a specific period of time. First, we record revenues. Amplitude has service revenue of $16,000. Service revenue is a normal credit balance. So, we record $16,000 in the credit column of the income statement. Next, we list expenses. Expenses have a normal debit balance, and all the expenses are recorded in the debit column of the income statement. Expenses of Amplitude include salaries and wages expense of $10,200, rent expense of $900, depreciation expense of $698, and interest expense of $63. Total expenses and total revenues incurred during the period are $11,861 and $16,000 respectively. Thus, the net income of $4,139 is the excess of revenue over expenses. Thus, total debit equals total credits. Next, we complete the balance sheet columns of the worksheet. In a balance sheet, we list assets, liabilities, and stockholders' equity. First, we list assets. Assets have a normal debit balance and therefore will be recorded in the debit column of the balance sheet. Under Assets, we have cash of $11,500, accounts receivable of $8,260, prepaid rent of $2,700, and equipment of $24,010. Next, we have accumulated depreciation on equipment of $4,638. Note that accumulated depreciation is a contra-asset account and has a normal credit balance. It reduces the value of assets. Next, we list liabilities and owner's equity, which have normal credit balance. Hence, they will be recorded in the credit column of the balance sheet. Under liabilities, we have notes payable of $7,620 and accounts payable of $5,580. Interest payable of $63, a liability, will be recorded in the credit column of the balance sheet. Under owner's equity, we have owner's capital of $27,930 and owner's drawings of $3,500. Note that owner's drawings is a contra-equity account and has a normal debit balance. It reduces the balance of owner's equity. The total of the debit column in the balance sheet is $49,970. The total of the credit column, excluding net income, is $45,831. To this, we add the net income of $4,139, which increases owner's equity. By adding the net income, we notice that total debits equal total credits. It indicates that assets equal the sum of liabilities and owner's equity.